This is Craig Haugard with your Financial Issues Ag Update. Well, the corn market was on the defensive Friday from decent planting progress and poor demand for ethanol as folks continue to stay home and not drive. It was encouraging to see the USDA announce the sale of corn to Mexico. We sold them 370,000 tons for the current marketing year and an additional 250,000 tons for next year. The soybean complex traded on the defensive from a round of profit-taking despite the announcement of more export business for soybeans. The sale that was announced Friday morning was 136,000 tons of beans to China and 125,000 to Mexico. Planting progress is moving right along as some folks finish up their corn planting. After last spring, some farmers are willing to take a chance in planting beans into cooler soil temperatures, and we've been seeing that going on. The wheat market tumbled on improving conditions in the EU and Black Sea region. Rain forecasts for the southern plains area over the weekend, as well as improving weather conditions for spring wheat planting in the northern plains, also pressured prices. Cotton futures ended the week on a softer note, with July futures 74 points lower as they settle at 55.63. For livestock today, I want to do something different, mainly for listeners who don't raise livestock, and that is comment briefly on the current economics of raising livestock. For example, a cattle feed yard in Kansas last week sold cash cattle at $103.18 per hundredweight. At that price, the feed yard that was not hedged lost roughly $243 on every head of cattle they sold. Looking forward at what feeder cattle are selling at, as well as what you can lock in feed for, the cattle that will be coming to market in September would have a break-even price of $100.52 per hundredweight. With the cash cattle bids in September projected to be $95.62, a feed yard could expect to lose $61.23 on every head that they put through their feedlot. Hogs are not any better. The Iowa and southern Minnesota weekly average price came in at $24.74 per hundredweight. At this price, the typical Iowa hog producer that with unhedged hogs lost about $55 per head. A sow bred today would farrow a pig in August, and with estimated corn costs at $3.12 a bushel and soybean meal at $294.70 a ton, expected production costs be $45.74 per hundredweight to raise a pig to live market weight in February. With cash hogs projected to be at $36.19 per hundredweight, pork producer would have a loss of roughly $23.88 per animal. These certainly are tough times for agriculture. Looking at dairy, after 3 consecutive lower closes on Friday, Class 3 milk futures seemed like they turned the corner a bit, with the June futures finishing 34 points higher to settle at 11.66. While farmers raising animals are struggling, reduced processing capacity as a result of the coronavirus had meat values shooting higher. Choice beef boxes were $9.08 higher to close at $293.37, while select boxes were $6.13 higher to settle at $279.02. And pork carcass value cutouts were $1.11 higher as they closed at $77.48 per hundredweight. Most of that profit is going to the processors and not being passed on to the producers, which makes it again, a tough situation. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.